Hello friends, welcome back to CforCommodities, your go-to place for agri-trade and commodity insights. I'm Lakshmikant and today we are decoding the latest US Federal Reserve policy decision and why it matters for global currencies, commodities and investor sentiment. The US Federal Reserve, as expected, held interest rate steady, but here's what changed and what has grabbed the market's attention. The Fed now projects just two rate cuts in 2025, down from three expected earlier this year. That's a clear signal that policymakers are growing cautious due to persistent inflation risks. Fed Chairman Jerome Powell emphasized that while inflation has cooled compared to last year, the prices is still not reassuring enough for aggressive rate easing. Powell expects meaningful inflation ahead as a result of Trump's aggressive trade tariffs. The greenback strengthened immediately with the dollar index climbing above 105. A stronger dollar typically pressures commodities as most global trade is dollar denominated. Gold prices dipped slightly as the stronger dollar makes bullion more expensive for non-US investors. Crude oil studied but remains volatile, especially with Middle East tensions. Agriculture commodities, especially those driven by global demand and exports competitiveness, could feel short-term pressure. Analysts now believe that a slower Fed pivot could delay fund inflows into emerging markets, including India, and lead to more near-term volatility in the risk assets. And that's the pulse of the global markets post-Fed. If you found this insight valuable, don't forget to like, share, and subscribe to CforCommodities. Drop your thoughts for questions in the comments and we will break it down for you in the next video. Until then, stay informed, stay ahead.